our COBT listeners and viewers. It's Maynard up in Whistler, Canada, with a really special treat. First of all, I want to thank the CIBC team, Mike Freeborn and group for hosting us this week. We're really looking forward to this immense conference with all sorts of energy, power, technology represented. But then I want to thank Grant Isaac. Grant has been a great friend to Veriton over the few years that we've gotten to know him. He's the president and COO of Cameco. And when you think of nuclear, I think, first of all, it'd be hard to find a more exciting space than nuclear. Perhaps AI, you would maybe say. But that's okay. You'll probably surrender the spot to AI. But when you think of nuclear, what I love about visiting with Grant is Cameco's perspective is pretty much everything related to nuclear. It starts with mining, it goes through conversion, processing, Westinghouse, global, it's everything. So Grant, thank you for sitting down and spending a little time talking nuclear.
Yeah, happy to do it. It's my favorite subject. And and of course,
I thought you were going to say it's your favorite podcast, and you don't care what the subject is.
I was about to say,
okay.
And by the way, I look forward to COBT every week.
Thank
you for sending it. So the opportunity to be a part of it was something I just absolutely couldn't pass up. And to be here in this beautiful setting of Whistler,
this is
doesn't hurt.
I mean, look at us. We have like a faux fire. We've got chairs. I mean, this is good.
Perfect.
It's not COBT this week. It's CIBC this week.
Yeah, perfect.
Well, we could jump in a lot of places. I think one, I always notice this with you, your schedule, you and Tim both. Like you guys are all over the world. You have customers all over the world, business all over the world. What's when you're out on the road right now, what are the things you're noticing that are a little different or a little more intense or a little more just the cutting edge on all these conversations?
Yeah, you mentioned in the introduction that we're right across the uranium, the mining, the milling through refining, conversion. We're working on an enrichment technology, obviously, and across fabrication, both Cameco and Westinghouse. And then there's the whole reactor space. And ours is a model. If I tried to boil it down, we just built a company where we now have all of the strategic pieces in place where we participate in the reactor cycle. We're building our own demand, right? Every reactor that gets built needs 80 to 100 years of the core of our business. And it just feeds right back through all of those service steps. What we're noticing is an urgency. We're noticing whether it's a climate security conversation or an energy security or a national security conversation, there's just an urgency around nuclear in a way that there hasn't been for a very long time. And it's no longer, what if, maybe, it's got to do it and you have to do it now. And I think the announcement of the US government just a few short months ago to get the process started in the United States didn't just crystallize the urgency in the US, but when the US announced they were going to start building it, it almost gives a permission structure for everybody else to say, okay, well, now it makes sense. Nuclear really, truly is back. And it's time to be urgent right across the fuel and reactor cycle.
Do you, when people see others placing orders, it seems like maybe a couple of things happen. One is your competitive juices get flowing. They're doing it. We got to do it, et cetera. But the other one is it gives you a sense that like, hey, we're going to have a lot of volume. And when we have a lot of volume, that means eventually the pricing and the execution risk, all of this will get better. So are the orders you're getting now, which side of that equation is more important? People getting comfortable on cost or just competing with each other?
Yeah. The launch conditions in jurisdictions that were starting to build gigawatt-scale, and those that were considering it, but then hadn't found the ability to kind of hit that escape velocity and start, they're all the same. And that is, we've done this before as a Western world. We built out, this is hundreds of nuclear reactors in the Western world, in the United States, in Canada, in Japan, in France, in Sweden, et cetera. It's been done. And of course, the Chinese are doing it right now as we speak, starting 10 a year, 12 a year, got 30, some under construction. But what we've really noticed is all of those conversations are just laser focused on, to do this right, we have to learn from what we did before, and we have to learn from other industries. that have figured out what standardization, what sequencing and simplification mean. Like
Mm.
gone are the days of the US building out at its peak 104 reactors, 55 different models.
Mm.
Like those days are over. People are applying good industrial processes to this, turning nuclear from a project to a product. And that's the way it's being thought of in jurisdiction after jurisdiction. So those that are launching are going, hey, we're building 80 to 100 year infrastructure that not only creates an economic multiplier while it's under construction, it creates this massive cluster multiplier, because once you have these, and I've heard they're called industrial cathedrals, 80 to 100 years of baseload, durable, reliable, secure power, it attracts industry and it attracts all this additional investment. And as long as we standardize, sequence, and simplify, we can do this right and we can do this well.
So when the U.S., I guess the fleet in the U.S. is about 94 or something like that right now. But when the U.S. was at its peak, wasn't it doing nuclear in a reasonably affordable way, but not necessarily through standardization? Or is that right or wrong? Like not only has it been done before, but it was done with multiple flavors. Or is that unfair?
No, in the U.S. in particular, it was done without the benefit of standardization, but yet was being done
so that's
relatively on time and on budget. And then other markets like the French, effectively, it's two models across 58 reactors. Canada really coalesced around the pressurized heavy water reactor, and very similar models across those 21 reactors that were built out. So this time we know if we just start something and keep doing it, we get better and better at it. And by the way, if we standardize, have as our reference case Vogtle 4, Southern Company's wonderful project, we're just going to get even more benefit. We're going to get the multiplier, and we're going to get the cluster multiplier much quicker to the benefit of the jurisdictions that are making the investment.
Do you find, because you guys bought the Westinghouse piece in 23, when investors or analysts or the financial community, or they're looking at you, do they sort of think of you as a nuclear super major, like we're a fully integrated? Is that the model they have in mind, or do they think of you like, how do they characterize you? Because you're a different animal. There are some other nuclear only companies. There's other mining. Like, I'm just kind of wondering how the financial community embraces and understands the business model.
Yeah, I think it remains a work in progress, and I think the way we characterize ourselves is also still getting better. Ours
Everybody
is...
at Veriton tells me that all the time. I'm getting better at explaining what we do.
So for us, it really, the common thread to all our decisions is we just love strategic assets. We love assets that are high quality on a relative scale. We love assets that have high barriers to entry. We're just not going to see competition pop up right away. We love assets that are just part of key strategic national security, energy security decision making. That's our McArthur River mine. That's our Cigar Lake mine. That's our conversion plant in Port Hope, Ontario. That's our fuel fabrication plant. That's all of Westinghouse's fabrication plants. And then, of course, now it's just this wonderful gigawatt scale opportunity around the AP1000. So I think when investors look, they're starting to understand we just have this suite of strategic assets that you can't put together, you can't replicate. We have no peer. They have scarcity value. They have strategic value. And now that we're in the reactor build space, either directly through Westinghouse with the AP1000s or in collaboration with the Koreans as they build out an APR 1400 to the benefit of Westinghouse, to the benefit of Cameco, we're just in a really unique position where we can contribute to building our own future demand in very significant ways. Every reactor, whether it's ours or the Koreans, becomes 80 to 100 years of core business for Westinghouse and Cameco. Rather than wait for others to create demand for us, we're just in the business of creating our own demand.
So do your investors understand it to be the case that you have this a string of highly strategic assets that, as you say, you create your own demand? But do they also appreciate or perceive that the margin improvement and the business improvement as a result of having all that together is added? I'm curious.
Yeah, it's a great question. And there's always a risk of generalizing, but like, let me go ahead and do it anyway.
Okay. That was a good one.
What we've noticed since the acquisition of Westinghouse in particular is we've really broadened that shareholder base. We had our traditional mining investors who were very, very comfortable with our mining assets, but really didn't understand our fuel fabrication assets and the manufacturing part of that business.
And pre-Westinghouse, how big was that part of the business?
Yeah, it was about 20% of our business. Okay. So we really had that strong
so you were
mining
plus.
Mining plus. And that's because we were always integrated, but we were integrated across the pressurized heavy water reactors. That's only 8% of the global market. 92% of the global market is the light water reactor space. With the acquisition of Westinghouse, we attracted an energy investor. We attracted an infrastructure investor. We attracted
a transition or climate,
absolutely,
clean energy investor.
Absolutely, and then we had to pause and we had to remember what kind of conversation were we having. Were we having a conversation where somebody was really familiar with energy and they understood the need for electrons and they understood that nuclear was critical path to those electrons, and now they needed to understand how uranium was critical path to nuclear? So did we have to work downstream, upstream, or did we have to take our traditional mining investors and help them understand why we want to be integrated and why we wanted to be downstream and what the economics of new reactors look like and what the reactor service business looks like and what the fabrication and enrichment and conversion business look like? So it was starting, just remember who your audience is and then fill in the blanks accordingly. I think we're getting better at that, but our impulse is still to talk about uranium, or we'll have lots of conversations that begin with, right, okay, well, where's the spot market of uranium at? And you sort of, do you have any idea how little I think about the spot market of uranium these days when we're talking about building reactors in an $80 billion project with the U.S. scale? Like, that will all take care of itself once we can unleash this new build project.
Let me ask you one question. It's interesting that the structure where you own 49% of Westinghouse, how would you tell us that operationally works? Like, how do you work with them? They're independent, but you're a major. Like, what's the functionality of that?
Westinghouse is a great company and run by a great team. And we have a terrific partner in Brookfield, who together we are a strategic board. And we help in areas where we think we can take Brookfield's incredible exposure to the energy space and the energy transition space and the ability to finance energy transition and big project experience, and supplement it with our nuclear experience. The fact that Westinghouse's customers are Cameco's customers. They've been our customers for decades, and we know this space, and we do big nuclear projects. The last mine we did was a $3 billion mine, Class 7 nuclear project. And so it's a pretty powerful combination when those two skill sets come together and can then help supplement what is an extraordinarily strong management team at Westinghouse. So I think it works really well. Sometimes I have a little bit of sympathy for the Westinghouse management team because they do have two owners who actually know their business or parts of their business really, really well, which is very different than, say, a publicly traded company where you have board members who are there to help you kind of round out your view, but they don't know your industry quite as well as you do. We know the industry very, very well, but I think on balance, it works very well. And I think the value creation that we've seen in Westinghouse is testament to that.
At one point, this is many years ago, we had Patrick Fragman on COBT. And I think the stat was something like, you'll help me, but it's like half of the world's reactors are either Westinghouse or based on Westinghouse technology. But the visibility as a result is stunning because Westinghouse gets the calls to be of service to those and others.
Yeah.
Really incredible.
Yeah, and that's helped the Cameco business. Like, if you think about in the past as a fuel company, we're really in the conversion in uranium space. As utilities were contemplating what to do with their reactor fleet, we were always just kind of an information taker. We'd have information we'd have meetings with the utilities, we'd have our list of questions, and we'd try to think, what are they thinking about license renewals, and what are they thinking about extensions and uprates, and what are they thinking about new build? And now we know exactly what they're thinking because we know the kind of conversations they're having with Westinghouse. So if it's a subsequent license renewal, we know that engineering work is going on. If it's an uprate, we know that work is going on. And so that really rounds out our view of what the future fuel demand would look like years ahead of where we would normally be engaged. And then in its limit, think about the new build conversation. When you're thinking about a reactor new build, yeah, you have a bunch of long lead items that you need to think about. Your reactor pressure vessel, your reactor coolant pumps, your steam generator, your instrumentation and control module, the steel floor plates. Those are all things you better order well ahead of time if you want to keep your project on schedule. And now we can come in and say, and fuel needs to be one of your long lead items too. In this world, as it looks like there's going to be shortages of uranium coming, those who have long-term contracts with a company like Cameco will not be short fuel. But those who don't think about it until several years down the road are going to have a tougher and tougher time finding fuel. So it needs to be thought of as one of those long lead items. We're involved in those conversations years ahead of where we normally would have been.
I was thinking, it seems like a number of companies, it could be NVIDIA, it could be SpaceX, but those two come to mind because they will talk about changes happening rapidly in our world, and we're investing in supply chain or technologies that enhance supply chain, or we're just very focused on our supply chain. I'm sure you have similar instincts. Is Cameco thinking of how are you trying to bulk up the supply chain around all of this? Like, what can you do directly or indirectly?
Yeah, obviously.
And that could mean anything. It could be people, services, technologies.
Yeah, if we think about, and I just, let me amplify the premise of that question. We started having conversations with the hyperscalers years ago. As Cameco, those who were interested in nuclear just had this impulse to understand the nuclear fuel cycle and then found their way to Cameco. And then when we acquired Westinghouse, we got involved in conversations because then it was about Westinghouse's technologies being deployed as part of those nuclear ambitions. And I was actually astonished the degree to which these companies do think decades ahead about where the pinch points are and where the critical paths are in supply chains that they're not even in yet. The amount of effort invested by folks like NVIDIA in understanding the nuclear fuel cycle is extraordinary to me because they're not even involved in it yet. And in fact, probably understand it better than some of the traditional actors in our space. They've just put in the time and put in the effort. And that's a good lesson for us. And so on the Westinghouse side, that team thinks every day about what are the holdups and pinch points in starting an AP1000 global supply chain. And what does Westinghouse need to be doing to start that? And then similarly, as we think about the build out of whether it's the pressurized heavy water reactors or whether it's the enrichment, the conversion, or the mining, we spend a lot of time thinking about where those pinch points are and planning and optimizing. But ours is a market on the fuel side where we've never rewarded our owners by doing too much ahead of time. Nobody in the uranium business has ever rewarded the investors by front-running demand with supply, because then that supply finds its way into a ruddy little spot market, and that just doesn't create maximum value for a uranium producer. So we still have to be very disciplined, thoughtful, but disciplined.
This is funny. I feel like you hear this in power, you hear it in oil and gas, you hear it in so many places where investors say, don't invest ahead of growing demand. Be really careful. Yeah. In fact, that's maybe a nice way they say it.
Yeah. It's easy to do in our business because we exclusively sell under long-term contract. Like we don't sell into the spot market of uranium at all. That's really a fool's game. And the reason is very simple. There is no reactor on the planet that is loading fuel in the next rolling 12 months or 18 months that hasn't already acquired the uranium. So if you think about that for a second, that means there is no in-year fundamental demand for uranium. There isn't. There's future demand for uranium, but nobody absolutely needs it today because nobody runs their reactor that way. So the spot market is thinly traded, it's discretionary, and there's no fundamental end user demand that goes through the spot market. So we don't target it. In fact, quite the opposite. We will occasionally buy in the spot market if we think people are selling material they shouldn't be selling, we'll take advantage of that and we will buy it, because that all helps tighten a market and it helps create better conditions for negotiating future contracts. It creates better value for floors and ceilings. So the good news for us is we capture the demand first and then we plan our supply. And we always think about that interplay between marketing and operations. There is no build it and they will come strategy. There is a they will come and we will provide strategy in the nuclear fuel cycle. And that is the best way to reward investors.
Fuel does seem, and you know, I did not grow up in nuclear, so I'd like to say it's a second language at this point, but fuel, from the disruption associated with Russia, new technologies in fuel, sort of a Western world need to get its act together, particularly around the downstream. There's just so much going on in fuel. It feels like, as I think about it, an under-discussed piece of this relative to its importance. Is that how you think about it?
It has been. One of the reasons why we're quick to put fuel on the list of long lead items is because it has been under-considered, but very simply because it has been abundant and the fuel buyers haven't had to worry about it. Take the enrichment complex. Enrichment was a well oversupplied market. Why was it oversupplied? Because you had the Russians with these incredible dual use facilities. These are military facilities, but when not used for military purposes, we're providing very, very cheap enrichment service to the West. And we now know why, to create a Western addiction.
Yeah.
Which means there was never a production economic price behind the enrichment price for the Russians. It was just whatever the world price was, they were going to discount it to win the next contract. The price would fall and they would just discount it again. And the world learned a very hard lesson, that this wasn't altruism. This wasn't the Russians saying, hey, we're here to help. This was the Russians saying, and when we do something you don't like, you're not going to have much of a choice or we'll turn off this tap. So fuel had been forgotten for a long period of time. It's come back into the conversation. And then when you look at the fuel space, one of the realities that we see is fuel buyers buy backwards. They don't start with the uranium. It's the last thing they think about. And we're just finding it's the last piece that hasn't really been embraced yet. If you go conversion, enrichment, and fabrication, these are all manufacturing facilities. By definition, we can build them wherever we want to build them. You can only put a mine where there's ore in the ground. There's no amount of industrial policy or trade policy that can fix geology. And mines, we cannot build in the life cycle of a reactor, building a reactor, but we can build all the manufacturing steps. So while the world is thinking about fuel more than they have, there's still a little bit of sleep on uranium, which seems like a tremendous value opportunity for an incumbent producer.
I was thinking, it seems like one of the big questions that comes up in Europe is, will they take Russian gas again? And the arguments are, on the one extreme, no way will they ever do business with the Russians again, to the other, which is, if it's that cheap, they'll find a way to do it. Does the same debate happen with Russian enrichment, that it might come back and it's kind of, is that a discussion point?
Yeah, it's an absolutely critical discussion point. So we have an enrichment project. We are working on third generation enrichment technology. It's a company called Global Laser Enrichment, GLE for short.
This is the one in Kentucky.
This is the one in Wilmington, North Carolina at the moment, but our plan would be to deploy it in Paducah, Kentucky, where the feedstock for our initial
I'm a Southerner,
project.
so I got excited that you're doing this stuff
You should
in
be.
Kentucky.
It's an exciting project. In its first iteration, it's a project with the Department of Energy to take depleted UF6 gas that has been through enrichment before. It needs to be re-enriched up to natural standards. So think about it as an above ground mine. It could produce 4 to 5 million pounds of uranium per year, disguised as UF6. So it's a 2,000 ton conversion plant at the same time. Very, very exciting project. We're working on it and we've been working on it very hard. The technology is not the concern for us. It is what's going to happen with the 40% of the global enrichment capacity that is Russian. Right now, there is a law in the United States that says Russian enrichment needs to be out of the market by January 1st, 2028. But we need to know that the rules of the road are there to support that kind of ban. We need confidence in it, because if we go and invest $1 billion
Mhm.
in an enrichment facility and then find ourselves competing with a state-owned enterprise,
Yeah.
by the way, that never had a level playing field. I mean, the Russians never bought fuel from the West, and when we ever tried to sell uranium to them in the past, they would say, like, "Are you crazy? Why do you think we would rely upon your uranium?" Like they said the quiet part out loud over and over again, and yet we fell for it, bought enrichment from them. So it's actually a trade policy issue that's holding up the investment decisions in enrichment. We need to know the rules of the road, and we need to know they're durable, because if the Russians are back, they're just going to underbid the market down to a low in enrichment down to a low price again. Good news is they don't have uranium. They can't create the same disruption in uranium.
So you referenced the deal, Brookfield with the U.S. government. Really exciting to see the U.S. leaning in like that. I think one thing that comes up quite a lot is whether it was Biden's IRA or the Trump administration's moves like this, we're in an era of government involvement. And usually in the business world, that was always a negative thing. It didn't sound so good. But the government can make great things happen and has in the past. And so you see governments all around the world. You're doing things with them. They're making things happen. Where are you seeing, you don't have to name names, but when you see a government that is really doing things right, like what do you observe?
Yeah, we don't have to turn much further than Canada. I mean, if you look at the Ontario government and their commitment to nuclear, it's actually one of the greatest stories in the nuclear space, period. I was going to say in the last 20 years, but it's almost period. Ontario went through a situation where they bought into the renewable story, realized that in its limit, that renewable exercise of feed-in tariffs is the snake eating its own tail. I mean, you basically just have a situation where you're bringing more and more subsidized power onto the grid. You're pushing the baseload producers, who, by the way, are the source of the subsidy. You're pushing them back to peaking. And then you're marginally costing the price of power. So people in Ontario are looking at, stories in the newspaper that said the price of electricity today is zero, and they're looking at their hydro bill and it's going up and up and up. And they sort of can't reconcile the two. And Ontario hit the wall. That snake eventually bit into something useful. And what did Ontario do? They went to refurbish all of their nuclear reactors, restore baseload, 24-hour power, and now they want to grow it. They've got a plan to build, 14 gigawatt-scale reactors. Think about that. The province of Ontario alone in Canada wants to build 14 gigawatt-scale reactors. The United States, at the federal level, wants to build 10. Ontario alone wants to do 14.
And they were early on this. Like, I can't remember when they started, but it was before nuclear had fully
Absolutely.
blossomed.
Yeah, started
Really
the major
impressive.
component replacements. They kind of hit this wall that I was talking about in the 2015, 2016 window and said, look, we can't be shutting these things down. We've got to refurbish them, and we have to keep going. And then it's an incredible supply chain, and it's great jobs, and there are export opportunities, and other people want it. And suddenly it's a plank of their industrial policy.
No, I've heard them present on it, and it's very impressive. And it's also clear that they were thinking about their industrial base and jobs and the economy. It was pretty holistic.
Yeah, it was pretty. So that remains a very, very good story. And then you think about what does it take to hit those launch conditions? And we've referenced a couple of them, but the jurisdictions that are building gigawatt scale, they're NPVing the project, right? But
does that work with an asset that
it doesn't?
I think NPV and nuclear that you're going to undervalue the asset.
Yeah, I can tell you today, give me even a really low discount rate, and I can tell you it's still not going to look very good. So they're doing payback math. They're going, these things last for 80 to 100 years. They're going to pay back their capital multiple times. They're doing the NPV, but they're doing payback math. And then secondly, they're doing the multiplier math. Like, people often talk about the Vogtle plant. It's supposed to be 12 billion, ended up being 30 billion. But it wasn't all downside, in the sense that if you think about these big projects, they generally have an economic multiplier 2 times the value of the capital project. So that effectively means the multiplier that went through the state of Georgia wasn't 24 billion, it was 60 billion. That was $60 billion that was spent in the state of Georgia on jobs, on industry, on taxes. Like that's a big multiplier. And then finally, there's the cluster multiplier. When you build these things, they attract business, they attract industry, and then that attracts further business and further industry. So the countries that are launching are doing payback math, they're doing multiplier math, and they're doing cluster math. They're going, this is drop dead obvious. We're building 100-year assets.
That we all have to remember. Right, those three things. We're going to make sure. One question for you. So we're here at a financial conference. There's obviously a lot of investors. When you sit with the financial community and they look at your business, we're used to all kinds of metrics that people care about: PEs and cash flow multiples and return on capital employed and free cash flow as a percent of market cap or something like that. But what in your world, what are people zeroing in on to understand, to assess the business?
Yeah, again, the risk of generalizing. So here I'm going to go and do it. We started to disclose EBITDA and an adjusted EBITDA across the Cameco and across the Westinghouse.
Like your piece of Westinghouse.
Yeah, because we just realized that a group of investors were using that as the ultimate proxy for what's the growth rate, what's the cash flow potential, and then therefore giving them the opportunity to add their own scenarios. Like right now, we don't include in the Westinghouse outlook any new reactors unless they're at FID. And none of the ones we've talked about are at FID. The U.S. program's not at FID. Poland, Bulgaria, Slovenia, what's going on in Ontario, none of those are at FID yet, so they're not in the business case. But it allows investors a very heuristic way to say, okay, if this is the growth rate of the core without including these, well, they put out a model for what everyone looks like. I'm going to say maybe it's not going to be 10, maybe it's going to be 5, or it's not going to be 20, it's going to be 10. And they could easily start to build up their own case and discover just how much value creation.
Do they get into, simple, like one reactor tends to mean one more API, one AP 1000 means blank, like that type of stuff?
Absolutely. And some will do it bottom up and some will do it top down. We had a funny conversation with a very large shareholder who was doing it top down one time. He's like, okay, the world wants to triple nuclear. So that means we need 800 more gigawatt-scale reactors. Okay, well, the French are going to get some, and the Koreans are going to get some, and the Russians and the Chinese are going to get some. So let's say Westinghouse gets 100 of those. And then you say, okay, well, that's a ridiculous number. Let's cut it in half to 50. And then you start doing the math on, like, it goes parabolic really, really quickly. And so there really is enthusiasm for the role of nuclear going forward, the support for it, and then ultimately the economic value creation that's coming from this really unique set of strategic assets that are represented from Cameco's exploration all the way through to Westinghouse's reactors.
So you touched on something which is very interesting. It's just the base level of enthusiasm. I alluded to it in the lead-in. It's tremendous. And it's amazing how it's changed so much in 3-4 years. And there's a lot of people coming to it again who are, maybe they're the nuclear curious, but they're not steeped in all aspects of this. So how do you find, how do you convey all the things you're excited about, but at the same time try to remind people that, like, hey, nothing is for sure, and there are risks, and not everything is going to work, and not every plant gets built. Like, how do we stay sober in the midst of what's clearly an incredibly exciting time for the industry?
Yeah, sometimes we wonder if
AI would be the same thing, but
so sometimes we wonder if, because of what we've been through as Cameco, we lived through 3 Mile Island, we lived through Chernobyl, we obviously most recently lived through Fukushima. Sometimes we wonder if maybe we're the ones who are too conservative because we are naturally conservative with respect to our capital allocation. We're still in supply discipline on the uranium side. We don't have all of our assets up and running because we wait for this demand to form. We don't try to front run it. So we just remain conservative in all of our disclosures. This rule that we don't put something in the Westinghouse business case unless it's at FID. it probably does leave a little bit of imagination on the table. We don't talk a lot about our exploration and our uranium growth opportunities because it's impossible for us to talk to investors about that without the fuel buyers hearing. And there will be a group of fuel buyers who hear that and go, we knew you were going to invest in a whole bunch of uranium. We'll contract once you start a project. Okay. And then you need to start placing material. And for us, it's about securing that demand before we plan to expand. And that's just one of the lessons we've learned in the past. So we stay pretty grounded, and we're quick to point out there are risks to these things. They're not at FID, but unequivocally, the backdrop for nuclear has just never been stronger.
Do you think we see, because there's a lot of nuclear players doing different things in different aspects, particularly on the reactor side, do you think we're going to see quote consolidation in the space?
Yeah, I think we are, and I would just have to say I'm obviously very biased on this. I just have always preferred utilization of existing technology, existing designs, existing fuel cycle capabilities, existing licenses, existing regulatory experience as being a much stronger investment case than novel everything. Ours is an industry that hasn't done novel very well in the past. And I also reflect on, we spend a lot of time, we call these new reactor designs or advanced reactor designs. But you go back 70 years when Admiral Rickover in the United States was tasked with choosing the technology that was going to underpin civilian nuclear power in the United States and beyond. He had molten salt reactors to choose from. He had high temperature gas reactors to choose from, pressurized heavy water reactors. Those were all on the table. He chose pressurized light water reactors for a reason, a set of principles that actually still hold today. They have stood the test of time. So I think there will be consolidation. The risks you want to manage when you're building new nuclear is you want to manage the design risk, you want to manage the fuel risk, you want to manage the licensing risk, and you want to manage the regulatory risk, because those four things are what create the most project risk. So in order to reduce the risk of your project, you got to manage the first four, and known technologies just, in my mind, have a tremendous incumbency advantage.
It's so great you mentioned Rickover, because there's an example of the government leaning in and playing an incredibly important role to reduce the cost and make it happen.
Yeah, and just operate on a set of very predictable principles that still hold today.
Well, we're almost out of time. It's 2026. What's your main New Year's resolution, or what do you? What's big on the radar for you this year?
I think 2026 is going to be a really big year for gigawatt-scale nuclear. I think this is going to be the year where we see FID on new projects. It might not be in the United States, might not be in Canada, but I think in other parts of the world that are evaluating, we're going to start to see FID, which is going to be really important for starting to put down those markers on value creation. I think the project in the United States to kickstart the supply chain will move ahead. I'm hoping to see an order for long lead items to really start the 8 to 10 reactor build project. I think that's pretty important. In the fuel cycle, I think this catch up where fuel buyers have been focused on fabrication, enrichment, and conversion, I think it will start to hit uranium. I am expecting more uranium demand to work its way through the market, which is going to be good for pricing, which means it's going to be good for bringing the next set of uranium resources into the supply stack, because we're going to need to invest in those. It's just not at these prices. So I often say to people, it's not that we're going to run out of uranium. It's just we've run out of $20 uranium and we've run out of $60 uranium and we're running out of $80 uranium. So in order to have the next tranche of resources come in, we're just going to need higher prices. And I think 2026 is going to be a big year for that.
Any comment on where that uranium comes from, or you can't really talk about that?
Yeah, I mean, uranium's going to come from the known places. You're going to see continued expansions in known producing regions like the Athabasca Basin. You might even see some greenfield start. It's going to be really tricky, really going to be difficult. I think there's going to be some hearts broken when people realize that a feasibility study is a marketing document, not a mining plan. And that's just what happens in mining. I do expect Kazatomprom, Kazakhstan, to continue to be a large producer, and then you're going to start to see secondary tier 2 assets come back into production, and then you're going to see them expand, and then we're going to start to open up greenfield, low grade open pit projects in, say, Australia or Africa are going to start to come into play, because they have to in a bigger way. We just need to see a higher price, and that's a consequence of more demand coming through the market. And we see that as being really realistic in 2026.
Well, you're most kind to sit down. It's fascinating. I just don't know of a more fascinating business. So thank you for doing this.
It's our pleasure. Thank you very much.
Awesome. Thanks, everybody.
Thank you.